Hello everyone, I am Leela Prabhugaonkar and I am from the Bodhi Academy. So, earlier we have discussed this lesson, that is national income and related aggregates. So, today we'll see the question answers with regards to this lesson, okay, that is national income and related aggregates. So, in this chapter we have seen the meaning of macroeconomics, what are consumption goods. Then also we have seen under consumption goods, we have seen non-durable goods and the durable goods. Then capital, intermediate goods, final goods. Okay, then stock, depreciation. Then we have also learned about the circular flow in a two-sector economy. Okay, so today we'll start with the some of the question answers with regards to this chapter. Okay, so the first question is, when will the domestic income be greater than the national income? So so when the net factor income from abroad is negative, that time our domestic income will be greater than the national income. Okay, the next is, what is national disposable income? So it is the income which is available to the whole economy for spending or disposable of the NNP, that is net national product plus net current transfer from abroad. Okay, so this is called as national disposable income. Then what must be added to domestic factor income to obtain national income? So net factor income from abroad. Then question number 4, explain the meaning of non-market activities. What do you mean by these non-market activities? Non-market activities, it refers to acquiring of many final goods and services not through regular market transactions. Okay, so example, vegetable grown in the backyard of the house. So these are some of the non-market activities which are not sold in the market. So but the it is only for the small family, we can say, some people, they grew their vegetable but not for the selling purpose. Okay, but only for their consumption. So non-market activities, it refers to acquiring of many final goods and services not through the regular market transaction. Then gross national product is, it is how it is measured. It is measured in terms of current market prices. Okay, it's called nominal gross national product. Then real gross national product is computed at constant prices. Okay, base year price. Base year price here, in the sense they will take the previous year. So it is called as real gross national product. Then the next question is real flow. What do you mean by real flow? So it refers to the flow of goods and services between different sectors of the economy. So flow of goods and services between different sectors of an economy. Example, flow of factor services from household to firm, and flow of goods and services from firm to household. So here in this diagram, we have seen the circular flow in two sector economy, and we have seen that in two sector economy we have got firms and household. So here we can see there is a flow of goods and services. Okay, goods and services, there is a flow of goods and services between both the household. That is, firm is supplying goods and services to the household, and household is supplying factor services. Okay, so this is called as real flow. So it refers to the flow of goods and services between different sectors of the economy. So flow of goods and services, real flow of goods and services between different sectors of economy. Okay, that is called as real flow. Between different sectors of economy. Okay. Then the next question is, define money flow. Money flow is nothing but it is a flow of money between different sectors. Now here we have seen different sectors like firms and household. So firm is supplying money and goods and services to the household. So flow of factor income from firm to household and consumption expenditure from household to firm. Okay, so this is the definition of money flow, and also we have seen what is the real flow. Then these questions can be asked for 3 to 4 marks. Okay, that is distinguish between gross domestic product at market price and gross national product at factor cost. Okay, so the difference between what is the difference between these two? So the difference between both arise due to net factor income from abroad and net indirect taxes. So in GDP MP, net factor income from abroad, it is not calculated, it is not included. But in GDP MP, net indirect taxes is included. So we can say that gross national product at factor cost is equal to gross domestic product at market price plus net factor income from abroad minus net indirect taxes. Okay, so this is the difference between GDP, MP and GNP FC. Then the second one is distinguish between personal income and private income. So personal income, it is the sum total of income earned and transfer income received by persons from all the sources within and outside the country. So it is the income earned within the country and also outside the country. Okay, so it is received by a person from all other sources, from within the boundary of the country or outside the country. Okay, then personal income is equal to private income minus corporate tax minus corporate savings, that is our undistributed profits. Then private income, it consists of factor income and transfer income received from all sources by private sector within and outside the country. So private income is nothing but it includes all the factor income and transfer income received from all the sources. Okay. Then the next question is distinguish between nominal gross national product and real gross national product. Now, nominal gross national product is measured at current prices, as we have seen in the above question that gross national product it measured at current prices. Since this aggregate measures the value of goods and services at current year prices. So gross national product will change when volume of product changes or price changes or when both the changes. But real gross national product is computed at a constant price. So it is taken at a constant price, taking previous year as the base. Okay, so these measures takes only quantity changes. Real gross national product is the indicator of real income level in the economy. Okay. Then the next question is explain the main steps involved in measuring national income through product method. So which are the steps that are involved in measuring the national income through product method? So these are some of the that is classify the producing units into industrial sectors like primary, secondary and tertiary sectors. Then estimate the net value added at the factor cost. So here we will be studying about which are the different steps which are involved in measuring national income. So how a national income is measured? National income So first one is we classify the producing units into industrial sectors. So we distribute like we classify all the producing units, that is primary, secondary and tertiary sector. So first we'll do the classification, that is primary, secondary and tertiary sector. Then the next thing is we will estimate the net value added at the factor cost, and then we'll take the also we'll estimate the value of output by sales plus change in stock. Then the next is we are going to estimate the gross value added by value of output minus intermediate consumption. Intermediate consumption, here we have seen the example of milk. Like milk can be used by the other the tea seller. Okay, so these are intermediate consumption. The next is deduct depreciation and net indirect taxes from gross value added at market price to arrive at net value added factor cost. The next is add net factor income received from abroad to NDP to obtain NNP, net national product, which is a national income. Okay, so these are some of the main steps which are involved in measuring national income through the product method. Okay, then the next is explain the steps involved in calculation of national income through income method. Which are the steps? So first we will do the classification of the producing enterprises, that are primary, secondary and the tertiary sectors. Then we are going to estimate the following factors: factor income paid out by the producing units in each sector, compensation of employees, operating surplus. Then we'll also going to see mixed income of self-employed. Again, then we'll take the sum of the factor income by all the industrial sectors to arrive at the NDP. And then lastly, we are going to add net factor income from abroad to the net domestic product at factor cost to arrive at the net national product at factor cost. Okay. So these are some of the questions for today. For the next class, we'll discuss the remaining questions. Okay. Thank you for watching my video.